And it's another live analysis as usual. I had for the durable goods actually today, even though the spotlight of the whole week is the PC, the personal expenditure, is the one that it seems to holding the markets a bit unchanged, a bit steady, because it's expected to give us clues and hints regarding the fiscal or monetary policy. In the meantime, let me double check whether you can. So everything seems proper. Okay, I'm not gonna share any asset for the time being. I would like very quickly to go through the events, actually what is driving the market so far today. Just a bit of a briefing, sorry, before where we're standing actually right now. So everyone, if you have noticed, basically, we have seen in general the stock market, especially during the Asia session last night, into a decline, significant declines, and mainly driven by the tech sector. So even though the European session this morning has actually bear some early gains, especially for the DAX. We're gonna see everything in a bit, but we have managed to see that the European stock market bear early gains, even though it's mostly lower. Same stands for the Asia shares as well, with the only exception to be the DAX managing to hold some gains. However, the theme of the whole week, let's say, is this kind of this ongoing losses that we're getting from the tech sector. Not significant losses, but mainly something that affects mainly the Asia related countries, the Asia session, and in the Asia countries in general. And also, something that has been seen the whole week is this risk on flows that we are seeing, especially in the Wall Street, in Nasdaq and S&P 500. Why I'm referring to risk on flows? Mainly is something that it has been triggered, let's say, from the hawkish comments that we have seen the whole week from the Fed officials, but also from the after basically the Australian inflation. This surprise coming out from Australia and Canada. So both countries reported a higher than expected inflation reading, something that raised concerns regarding this stubbornly high inflation globally. So you can say about how Australia and Canada might be related with the US inflation and the US economy, etc. The fact that two big countries, um, in these two big countries, we have seen inflation. I'm not going to say back, but providing a bit of a growth again, started concerning a bit the markets in general, because it's something that we might see. Sorry, I just noticed that my head is like it choked. So yeah, it's something that raised concerns regarding a global inflation pressure back. We had a slowdown that was positive. That was something that it will had hinted over the last few months. Rate cuts, easing of the monetary policy, but now it seems that inflation is coming back again, and yeah. That's why there is a lot of cautiousness, a lot of concern, speculations for an early RBA hike as well. Some also it's something that it keeps under pressure the Bank of Japan as well to adjust its monetary settings as well. So that's why we were getting an even weaker yen. So yeah, so it's they are correlated. It's like a chain. Yeah, but in general, because we have the PCE tomorrow, which is Fed favorite release. Don't forget that, and is an economic release that actually provides clues regarding inflation. Okay, it will give us a surprise tomorrow. Will pretty much indicate a solid inflation upcoming reading. So it's very, very important to see what will happen tomorrow. But anyway, ahead of the PC tomorrow, we have seen a bit of cautious moves today. Some ranging markets, some assets were ranging, some have been stabilized. We're gonna go through everything in a bit. Live from Nigeria, welcome. Ernest, welcome. Bevani from Ghana. Okay, yes, let's do this. Let's do this. Let's start, guys, with the gold. Actually, yes, why not? It was the one that actually we've seen a significant. I'm gonna start with the on purpose with the daily chart, just uh, just to give you an idea where it's standing overall. Okay, as you can see over here, dear Ben, we have I cannot really claim that it's a head and shoulders yet. Okay, but it's definitely in the long and medium term we have seen gold returning some gains but holding above 2200s for 3 months in a row after this impressive rally that we got since 2023. Okay, and as you can see, that 3 month support still holds. Okay, this is the overall picture. Very neutral outlook, sideways outlook in the long and medium term. So now let's check what's going on so far today. Okay, this week in general, there was a significant decline, as you can see. Okay, this is the week's performance. This is a 4 hour chart. Okay, 4 hour chart. And as you can see, we had a significant, let me just make it bigger. Yes, we had a significant plummeting, let's say, for gold, and that was mainly due to the strong dollar. Okay, I'm gonna show you dollar chart in a bit, but after such a robust US data, I'm referring to consumer confidence as well. So robust data um, and also um, in general the fact that even that the rate cut is like postponed by the end of the year and is not anytime soon is something that supports significantly the dollar, along with some safe haven flows as well, because don't forget that this is the very last few days of June. So on Monday we're gonna have new new month, new week, obviously, new quarter, and we will enter the very first second half of the year. Okay, new quarter, 1st of July. So basically, on Monday it's going to be 3rd of July. Is the very first trading day of the year of the July and the third quarter. Nonetheless, gold. Okay, there was a significant decline. On the mainly on this due to the strong dollar. Okay, the spike that we have seen in the dollar this week is what it has led to nearly, I think it's 2% dip, maybe more in bullion over here. Also, I've seen a report from Bloomberg stating that there was a correction on the prompt ETFs to top up their holdings, something that also affected the demand for gold, along with the weak demand also from the Chinese industry, say the Chinese commodity sector. So all this is what has led to um, to this to this decline the last this week mainly. Okay, so for the time being, these dips, okay, these such dips found a significant support around the 2022. Basically, let me be more precise, around the 2290 territory. Um, why is that? Why we keep seeing this support, basically the bulls defending this area over here for 3 months in a row, guys? Mainly is the central bank's demand. Okay, the central bank's demand is what is helping the gold to keep prices at elevated levels. Okay, so according to the World Gold Council, around 20 central banks of the major ones expected to raise their holdings further. So this is the highest number since the put a note somewhere. Uh, since 2018, yeah, since the 2018. This is what the World Gold Council reported. They also mentioned regarding portfolio rebalancing as well and domestic production, coupled with all these safe havens flows that we have due to geopolitical uncertainty, geopolitical risk, and with inflation driving further purchases, unfortunately, as well. So that's why this area has been widely defended by, strongly defended by the bulls. Okay, but sorry, by the sellers. My bad, my bad. No, not by bulls. I was right. Sorry. Confused. So obviously, I said all these macros, and I try to explain a bit the fundamentals over here because this is an important level. Okay, and if for any reason, either some kind of political or geopolitical risk, either with the continuation of such a robust US data during the summer, um, for any reason we've seen a significant break of this support that could lead to a free fall with the next area, support area, down to 2200s, 2100s. Okay, there is not a support below there. The next support is over here. Nonetheless, let's move on. Sorry, I was just mentioned too much. Sorry today. So yeah, let's get back to what's going on right now today. After a pretty sideways and choppy Asia session, as you can see over here, we have seen the gold gaining some ground. That's why you ask about gold, Ben. You're waiting to see whether this rally will run up out of steam or something, or to run out of steam or something, or whether the extensive looking that the release just now boosted further the gold. So there is there was a recovery over here, already broken the first resistance of the day. Let me check a bit the data as well. Where's my calendar? It seems that this is just a correction, I'm afraid, ahead of the PC tomorrow. The durables are out. Are they out? Let me just check. Give me a second, guys. And here we are. Durables. So GDP and durables. So the GDP actually is in line with expectations at 1.4%. So it rose by 1.4%. Jobless claims slightly above expectations, 233,000, uh, just 3,000 above the forecast mainly. And the durable goods also have seen some kind of a growth, 0.1%, beat expectations, with the core, however, missing expectations. So we have some kind of a mixed report over here. This is what it is, some mixed signals. That's why we might see a bit of uncertainty over here, a bit of an indecision. This is 30 minutes chart further extended. Actually, there is another boost to the upside for gold. Already breached the 2320 level above the first resistance of the day. Sorry. But the breakdown, as I can see, of the breakdown of these reports, the GDP, the durables, the trade balance is a bit mixed. Anyway, this is the third reading of the GDP, so it's not so significant. That's why it seems that attention is mainly on the durables rather than the actual GDP, because it's the final reading, it's the third reading anyway, so it's not really the one that um, um, that has triggered, let's say, uh, this move that we have seen is mainly the technicals, a bit of a correction. So if I zoom out, okay, it seems that there is some kind of a buying the dip ahead of the PC tomorrow, because there is nothing really, guys, to indicate why the dollar has um, why the dollar has found some has we have seen in the dollar a bit of a pullback. It looks to be just a correction ahead of the important PCE number tomorrow. Enough. Let me go back in the dollar to see what's going on. So that's uh, the European session corrected after. Let me just so you can see it. After extending yesterday to 105.75, we have seen it overnight, and up to, actually so far today. This is the 1 hour chart. Um, Slowing down a bit, pulling back a bit, and right now consolidating for a fourth hour in a row around the pivot point, which is the 105.50 level. Okay, so pivot, so basically consolidating around the pivot point of the day. So a pullback and a sideways move has been seen in the dollar so far today, something that has is responsible for this short-lived boost that we are getting from gold over here. So this is pretty much it. It looks to be just the technicals are responsible for this rally rather than fundamentals. And let me also go uh 1 hour candle and higher low. Okay. Will it drop? Are you bullish or bearish on gold? Okay. Let's take it step by step. Okay. I'm gonna stick on gold. Just so so. Let me. Okay. Right now, just to clarify something. Okay. Right now we have we're in a 1 hour chart. Okay, and we have seen the asset. This is the 1 hour chart in gold. We have seen the asset rallying for nearly 6 hours, more than 6 hours in a row. So significant boost, which is overbought. Okay, but you can see over here that the stochastic have flattened. The same stands for stochastic, so that might trigger some alerts regarding regarding as gold actually being at the very end of this rally. But to get some further confirmation whether it's running out of steam and whether we're gonna have a correction or a bit of a pullback and etc., whether this is the end of the trend, I will just add some momentum indicators to help me on this one. Let me just, okay, just with me. No, okay. Have put my high Kanashi on. I'm gonna use the MACD as well. So, my dear friends, everyone that is you are asking about gold. Okay, as you can see over here, we still have some big body Heiken-Ashi, bullish Heiken-Ashi candles. And as you can see, none of these two oscillators, RSI and stochastic, is pointing to a bearish cross or pointing to the downside. They are flat, but they're still um, in the overbought territory without any indication of a correction downside or a bearish cross. Now, regarding the MACD, we have seen a decreasing of the bearish in a bias the whole day. The histogram has turned positive. However, the signal line is well below it still. So there is nothing really from MACD perspective, but the fact that both RSI and stochastic are still positive, okay, along with the body of the candles and the fast moving average that I have at the back. If you check both fast moving average that I have, the 5 and 9 exponential moving average, all these, so RSI, stochastic, the rising moving averages, and how big bullish these Heiken-Ashi candles are without any tail at the bottom, indicates that there is still some room to the upside, at least for the next few minutes or next few hours. Okay, so the very next support obviously is up to here, close to the second resistance of the day, or the previous ceiling that we got basically on Monday. Okay, 2330, 2334 territory. Now, let me just indicative one. So already breached the 65%. Yeah, so I was quite right. So the very next ceiling is up to 2330 area, and 23 was the 2334, 2335, which is the previous highs. So there is some further room to the upside, but in the very, very short time frame. Okay, guys, so keep an eye in the 30 minutes chart to see whether there is any whether there be any sign of a pullback. For the time being, there is none. If you start seeing small body candles, red ones, so or um, um, if there are tails on the bottom of the candle, then that's an indication that there is no further steam to the upside and we might see a pullback. So something similar with oops with here, you see it was up, and we had our very first negative candle, red, small body one with a large tail at the bottom, signaling that, you know what, something is changing, sentiment is changing, be careful. However, the confirmation came an hour later with a bearish candle and no tail at the top. So this is what you're looking for. Okay, this is a sign of a pullback, and if you see something like that, then the a move below the first resistance of the day could trigger the attention to the pivot point of the day, which is the 3305 or the round 2305 or the round 2300 territory. Okay, everything clear? For the time being, in the short term, looking 30 minutes chart, there is still some room to the upside with the next resistance level at 2330 territory and 2333. However, this is uh, uh, however this is an already overbought condition, so you need to also start looking for any sign of a pullback. Okay, this is high Kanashi candle, so be careful nonetheless. But overall, as I said, it's neutral. Overall, the outlook remains neutral as long as we don't see a breakout of this support or a return above the 2350 territory, the 2350, 2365. There is no change in this sideways move, in this range in market that we have seen in gold in the medium and long term. Nonetheless, and this just does, it looks to me like a pattern, but let's keep monitoring it. Melo, it depends. Okay, we had a channel that would have been even easier. A channel seeing the higher highs, higher lows, where we are into, whether we are in the upwards, in the upper level of the channel or in the down on the lower um, level of the channel, etc. There are different ways to interpret every single asset depending on what kind of move you see. Over here, what we have, it's a correction and bounce bounce away from the 3 months support. Okay, that started basically very, very early today at the 8 o'clock server time. This is when this rally started. But right now, what you need to keep an eye on is when, because it's overbought already, when we're gonna have any signs of a pullback. For the time being, it seems that there is still some further room to the upside, limited one though, guys, okay, limited one, but there is still some further room to the upside. There is some the bullish bias still holds in the very, very short time frame. Welcome everyone, welcome. Still the gold question. Yes, I'm afraid, Emmanuel. Yes, I'm afraid. Okay. I'm gonna actually let's change. By the way, it's your session, as I keep saying. So let me know if there are any assets that you want me to cover. I'm here to try and go through everything. Okay. So this is why we provide these live streamings. Okay, so let's get back to the dollar. Why not? So that's the correction that I was talking about earlier, ahead of the PCE, a pullback away from the highs that we had seen yesterday. Sorry. It was the biggest winner yesterday, mainly. Again, against all the major currencies. Sorry for that. Um, it was definitely the big winner, um, due to the treasury's weakness, due to the sell-off that we have seen in Asia session, due to the surprise from Australia and Canadian inflation, due to the hawkish comments, and so on and so forth. But remember, guys, it's the very last few days of the quarter. As usual, there is a lot of portfolio rebalancing into a quarter end. The quarter ends tomorrow. Okay, that's why we have seen this sell-off in treasuries. Okay, after a pretty impressive rally in June, we've seen a sell-off yesterday, and that's what has led also to this boost on dollar. So remember that also is the end of the quarter flows that affect significantly the assets today. Also is what might happen tomorrow, indeed. So that's why I said rely more on the technicals today. The only thing that is coming out today is the presidential debate tonight, but it's unlikely to have any impact in the markets. So everything depends on tomorrow's PC chain price report. That's why the bulls are sidelined, because we're expecting a pretty deepening report, especially with this. With the latest inflation readings that generate some kind of concerns. Nonetheless, let's check. Pullback. The data extended this decline significantly. The RSI, can you see it? Yes, RSI dropped down and it points further to the downside, as you can see. So there is some room for further correction. So 105.35, the very next support level. However, the mixed signs that I'm getting from stochastic is not convincing enough to keep me on the loop for a retest of the 105.35 level. So it seems over here that we had some recovery. So RSI points something else, points further decline, and stochastic points a recovery. So very, very mixed signs from the momentum oscillators over here. So that might lead to further consolidation between 105.50 and 105.55 area. So basically here. some consolidation, further sideline move for dollar over here. Okay. Hmm, that's the 15 minutes chart. Let me check something. So we had this is 9. It's the second, guys. With green is the 9 exponential moving average. With red is the 5. So 5, let me zoom in a bit. 5 is below 9. So, nah, RSI. So, yeah, we might see indeed some consolidation on this area over here, guys. So let's keep an eye on it. Let's keep an eye. That depends on how this candle will close in 9 minutes from now. Okay, let's return in a bit. Pound yen, yes, 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 of course. Pound yen, pound Swiss, euro yen have triggered my attention since last week. So, oops. Okay. In general, because of the yen weakness, we have seen yen crosses driven mainly by this yen weakness. That's why if you see the overall picture of pound yen, you're gonna see. I'm gonna share all these questions. You're gonna see that is way on to the upside due to the weakness of the yen. But let's zoom in and check what's the intraday picture. And here we are. So choppy, 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 flat, and a nice, beautiful, bearish sign over here coming out from stochastic, indicating that we might see a pullback away from the top of this range down to the bottom of this range, because our asset is keep consolidating and ranging since yesterday. Basically yesterday it entered this ranging market, okay, between the 202 40 and 203 area. So ups and downs. So any breach of the top of a range indicates a potential pullback. So my dear friends, keep an eye for any bearish cross of our fast moving average, or any pullback and a break below the pivot point of the day, which is at 102.80 level, because this is what it will trigger a decline down to the support of the day and the 202.50 level, so around 30 pips lower. Okay, stochastic already bearishly crossed and extended lower, and actually keeps pointing further to the downside. Okay, so it seems that the sellers slowly um, are gaining the control over here. But in order to get the confirmation, we need a move, basically a decline, a nice negative bearish candle below the 202.83 territory. Okay, so let's wait and see. Keep monitor how this session, this candle will close. But yeah, my dear friend, intraday we got some bearish signs, some pullback signs. Okay, But you need to gain this confirmation. You need to see this uh, extending, rejecting this top end, extending downwards. Um, and obviously, a bearish cross of the moving averages, similar to the one that we had over here. Okay? If you don't get that, we don't get that, then we need to keep monitor the asset. But considering the yen weakness, considering um the fact that pound has found uh, um, some ground so far today, this is what is actually what is it supports a quite of a strong pound against the yen. I would like also to show pound Swiss. Yeah, here it is. I don't know why, but it triggered my attention a lot. For some reason, oh, sorry. I think it's something that I showed last week as well. I keep monitoring it and monitoring and monitoring it because it looks like a head and shoulder formation that I need to keep an eye on all the time. Can you see that? Up, down, up, down, up, down. Neckline over here, already broken neckline, trying to recover. That did a bit of a correction. However, overall, the fundamentals and the technicals point to the downside. So the last 4 5 days have been in a correction, but it struggles to extend above the neckline. Can you see that? Basically, it's Heikenashi once again. Sorry, that's clearer right now. Heikenashi once again. Corrected. Okay, corrected over here. As you can see, basically around 50% of the latest down leg. Struggling it for 3 days in a row. This is pound Swiss, guys. Struggling for 3 days in a row to extend above the neckline. Okay, so, but in general, the head and shoulder is a bearish pattern, right? So that's why looks to be just a correction before another swing lower. Sorry, before another swing lower, probably a bit of a correction. So I want you to keep in your monitor list this beautiful pattern. I know it's a daily chart you might not be interested in, but keep it in your monitor list because it will definitely help you even in your intraday setup. This is the 1 hour. Okay, this is the, sorry for that, just okay, this is the 1 hour performance, 1 hour chart. Try to recover some of the losses, but we have this latest, this is a 30 minutes chart just to see that the indecision or basically the end of this rally is already here. Okay, the very first bearish candle with large tails at the top and the bottom, indicating that this might be the end of this rally and we need a decisive full body candle. Ooh. Downwards. This is the very first one, actually. Nice. So, Oh, that's the 15 minutes candle. Down, down. So, guys, I don't know whether the correction has already started. In order to be convinced, I will probably have wait for another 30 minutes just to see how this candle will close. But definitely the sentiment has changed. Can you see that as well, or am I alone over here? Can you see it? I know it's a 15 minutes chart. I shouldn't probably looking at it, but that gives me just some clues that the sentiment is like changing slowly, slowly. So we now need a confirmation. The confirmation will come with this last with this new 30 minutes candle, but you need to be a bit patient and wait to see this candle closing before taking any decision. Obviously everything depends on what kind of a trader you are, whether you're a scalper or not, the 5 minute trader or not. And it said that for such a short term time frame such as 5 minutes chart, the dip has already started, and we've seen that there is a consecutive bearish high Kanashi candles pushing lower and lower and lower. But that's a five. I'm repeating myself. Five chart, 5 minutes chart. Okay, but yeah, the sentiment has changed. Has definitely changed. So next immediate support levels, just few pips lower, actually 3 pips lower, another 5 pips lower, and obviously the bottom of the lows of the day, which is down to 113.15. Yeah. So, and I'm gonna use also my Fibonacci extension over here. Yes, okay. So sentiment has and is about to change. Run out of steam. Some kind of a pullback has already started. Let's see. So I will probably return back to pound yen to see what's going on over there as well. Nothing. Nothing for the time being. The pound yen remains sideways, remains indecisive. Okay. Guys, just bring some comments over here. What else you want me to check? I'm here for you anyway. So shall we get back to gold? Still to the upside. I did mention at the very beginning of this session that it seems that there is still some room to the upside. That RSI is not turning back yet. Stochastic did, but still, we still got in some expanded Bollingers, rising moving averages. So not enough, apparently, it's not enough. There's no pullback yet. I'm gonna put the trend line as well. This is a 30 minutes chart in gold. Okay, gold 30 minutes chart. I return back just to keep an eye on it. This is gold 30 minutes chart. As you can see, rally continues. RSI is unchanged. The only one that had a negative signal was stochastic, but by connecting the bottoms, you can see that we don't have a break of this trend line. So a break of this trend line that I just put on connecting the bottoms of the of the stochastic, sorry, will be an indication that sellers are back. For the moment, sellers are not back, so we still have some boost for gold with, as I mentioned earlier, 2330 and 2332, the next immediate resistance levels, even though it seems that there is still a lot of room until that territory band nevertheless. Yeah, Bitcoin. Yeah, Bitcoin. Bitcoin. Let's see. I ignored lately Bitcoin because it's still okay. Um, it's a bit steady overall, but yeah, ignore. Let me just refresh a bit my template over here, my chart. It's the daily one. Here we go. Okay, so yeah, 60,000, 60, actually 58K is a key support level for the asset. So that's a 1, 2, 3, 4, 5 month support. Okay, the asset hasn't managed to extend below it for 5 months in a row. Okay, the last 4 days is like flirting with this bottom, but struggle to extend lower. Let me correct this. Moving averages as well. Okay. Keep an eye on 200 exponential moving average. If the 58k breaks, so 50, if at 58 breaks, 50k breaks, that could open the doors to the 200-day moving average. Okay, over here, 52 to 50,500 territory, which is the block, an earlier block that we have seen back in January. Okay, now let's check intraday what's going on. Recovered significantly on Monday, extended to the upside. Let me put the intraday setup wide intraday. Okay, perfect. Um, it's very choppy. Only small body candles, narrow, narrow moving averages. Yeah, there's a lack of volume, lack of volatility over here. Okay, there is some bullish bias from both RSI and stochastic, indicating a retest of the 62,000 territory. Okay, over here, but yeah, small body candles, narrow a bit. So yeah, nothing really exciting. Yeah, it could kick this 62 easily, but the momentum is not strong enough, or it doesn't look strong enough to break that level. So yes, it could trigger, it could retest that territory, but it seems that it will not break it. At least the momentum is looking weak, basically. Yeah, it looks weak. Just change a bit to see. Ah, so we had a bearish cross 2 hours ago, confirming a move to the upside. But if you think about it, it's in range the whole week. So bottom, swing high, top, swing low, and so on and so forth. and neither the slope of this RSI or the slope of the stochastic indicates that there are buyers are increasing and so on and so forth. That's why I said that it will probably kick the 62,000 and post this rally. I mean, yeah, it's not looking okay right now. I'm in a 15-minute chart, so don't be confused, guys. But yeah, I could retest the first resistance of the day. Uh, but overall is within this consolidation for 1, 2, 3 days in a row. Not really exciting, my in my humble opinion. Every week, unplugged. Every week. Pound dolls, yeah, that would be interesting. That would be interesting. Pound dolls. Let me just. Pound dolls. Let me find it. Pound O's. Okay, clearer. So it's sorry for that. Just let me sort out a bit. Excuse me. Excuse me. Drink a bit. So pound O's down on the downside nearly the last 2 weeks. Yeah, the last 2 weeks of June. Still unable to extend and break this April bottom over here. This is definitely something that could trigger free fall down to the 186.50 area, down to December bottom. But for the time being, we haven't seen the asset managing to break that level. It's been flirting it for 5 days in a row. So yeah, in negative to neutral is the outlook in the medium term. Let's go down to the 1 hour chart and see what's happening right now. So we have some ups and downs, and a sharp swing to the upside that basically uh, ran out of steam very quick. That was very quick. We started actually, it held for the rally held for 2 hours, and it seems that correction downwards has already started, my dear friend Isaac. So doji candles with tails at the bottom and a full body candle without any tail at the top is the definition of a bearish signal in this third bearish high can ashi signal in this 30 minutes chart with the support area down to 189.55, 189.40 level, basically the lows of the week, okay, clear. uh Euro dollar, don't have euro dollar. How is that possible? Okay, I'll start as usual with the daily chart, okay, and I would like actually to, okay, daily chart. The reason why I started with the daily chart is to show you this a bit narrow flats, pretty with this just tiny slope channel that has been seen the last 2 weeks. Sorry, weeks. Let me just. I would like to use a regression channel. Where's my regression channel? Let me just use a regression channel, trying to find one. Where's the okay, here it is. I was choosing the wrong again and again. With the standard deviation, I will put it up to 2. Yeah, much better. You see, satisfies quite well the tops, satisfies much better the bottoms as well. So for two weeks in a row, we have seen a euro in a narrow. Uh, by saying narrow, I'm referring to the slope is tiny, but it's to the downside. That indicates consolidation, but also an overall negative outlook for euro against the US dollar. In general, you should be aware that the divergence between the central bank's policy and the two economies, euro and dollar, is something that will have a significant impact, and it will monopolize the interest, especially in the third quarter, and will basically be the main driver of the markets, especially in the third quarter of the year. So overall, and euro dollar under pressure, but in a downwards channel, but finding some significant support as well, uh, at the 108.6 territory, basically 106.65. So that's the overall picture. It will help us analyze as well the intraday picture. So ups and downs. Right now has broken. In the European session has extended higher, okay, above the mid of the channel. We are seeing some kind of a rising momentum. Look at that. That's a bit bizarre. We can claim that it's a divergence, but we're not really sure about it. So something to keep an eye on for tomorrow, and especially for Monday, which is the beginning of the new quarter, guys. Look at that. Momentum is rising. Okay. Yeah, it is. And the euro posting lower lows. So that might be a divergence signal. But for now, there's no indication. So just something to have on your charts ahead of the session tomorrow and ahead of the new week, especially. Okay. So it is in the channel. You are absolutely right. More blessing. So I will move even lower to the 1 hour chart to see what's going on over here. Momentum crossed positive. RSI is above 50. It has been above 50 for 2 hours in a row. A nice decisive bullish candle with basically it's basically broken the previous high over here, but it looks that it's running already out of steam. Let me just double check. No, still some traction as well. Okay. Gonna delete the Heiken Ashi. So a nice decisive bullish candle the last hour. Very big one. Nearly full body one. So that is turning the attention to the previous high at 107.40. So, okay, momentum is neutral to positive. RSI is rising. Let me put my moving averages on as well. The 9 and the 5, both exponentials, bullish cross, up, corrected a bit, up, still pointing higher. So there is some further room to the upside, my dear friends. So keep an eye. Actually, I'm gonna find some immediate support and resistance levels using my Fibonacci extension over here. Beautiful. So breach and broken. So the very next one is another 10 pips to the upside, 107.30 and 107.40, the very next resistance levels for euro dollar. And overall, in a channel, as my dear friend More Blessing mentioned earlier. Okay, guys, but the divergence over here was very interesting. Never mind, just to add it on our monitor list. Yeah. Dear, we have already covered gold. Let's return to see, still close to the first resistance of the day. The fact that we don't get any tails at the bottom of this high Kanashi indicate that there is still further room to the upside. Short-lived one, but still some further room to the upside. Moving average are keep pointing higher. Stochastic still intact. RSI still above 80. MACD still rising in the very, very short time frame. So it seems that there is still some further room to the upside, or at least that there is no indication of a pullback yet. Okay. Um, so it's yeah, just it's anyway an overbought condition over here, but that it looks a bit difficult to breach the 2330 level, but for sure is still holding gains. There is no indication of a pullback. Okay. The previous one was euro dollar, dear John. Right now, this is gold. I just returned quickly back. And now I'm going to go to the very last question. When is the right time to enter? The right time to enter is when you have a clear signal, either of a breakout, either of a breakout of a support and resistance level, either a new high Kanashi candle. I mean, depends on your strategy. Okay? But mainly when you have a breakout of a key support and resistance level of a previous high, previous low, a sign of reversal, which has been confirmed. Okay. So like this pound Swiss over here. Okay. That very first doji candle triggered the attention. It was, oh, okay, it's changing, sentiment is changing. So confirmation will come as soon as this candle close in 6 minutes. If it closed like that without the link tail at the top, such a big bearish candle, then this is an alert that the asset could return back to the bottoms of the day and down to the very next resistance support level of the day, which is 113.30, 113.20, or even 113.15. Okay, so that's the very next support levels. Euro Swiss, last asset of the day. Uh, so you see, guys, for dollar, by the way, we have two consecutive bearish candles. So it seems that it's significantly under pressure. So attention is now, other than the first support of the day, also at 105.20, which is the previous um, bottom seen back in Tuesday. Okay, okay, yeah. Consecutive decline in RSI, consecutive declines in stocks, two strong bearish candles lower. Both moving average are pointing downwards, so there is a lot of selling pressure over here in dollar intraday at least. Yeah. Now Euro Swiss. Last but not least, I always draw up on a 4 hour chart. I guess you find your support and resistance levels in the 4 hour chart and enter on a 15 time frame. So you're considering entering. So that worked for you. That was something that this plan worked for you. If yes, that's brilliant, dear. If you have tested it and you keep using it and it's provide you some nice signals, that's great. But it's good always to start from higher time frame, identify support and resistance levels, having a clue about the overall sentiment, and then going down to see what is happening intraday. Okay, regarding Euro Swiss has basically this morning broken this 2 days resistance at 96 level, and that was the earlier today. It posted a bullish signal by breaking these two days, 3 days ceiling. This 3 days ceiling broken earlier today, triggering the attention to the upside. So it seems that, let me just, okay. It seems that it has returned more than 25% of the losses, has returned more than 25% of the losses seen in since end of May, and triggered their attention to the uh, sorry, just very very quickly, triggered the attention, trigger basically is looking that the rally has resumed with the very next key resistance area up to 96 50, which is the 38.2 Fibonacci extension. Intraday, in the meantime, is already hovering above the 96 level, while further higher lows could basically find some resistance at 96.20 and 96.40 level. As I can see, momentum is still positive. There was a bit of a bearish crossover here earlier, with the moving averages in this 1 hour chart flatten. So is some consolidation might be seen over here at 96. Yeah, some consolidation might be seen, my dear friends, so keep an eye on that, because moving averages have flattened. Stochastic and RSI start pointing slightly lower, so we might see some consolidation at 96 level. Okay, take care. So guys, if there are no further questions, I'm gonna call it a day, because I'm already an hour live. Okay. Let me check whether there's anything significant coming out right now. No, nothing. Dollar in a pullback after the GDP and the durables. Basically, is this mixed picture along with the anticipation of PCE tomorrow. Um, um, so it's uh, what else? Um, yeah. So there is some further room lower for dollar, apparently, but keep an eye on this trend line over here, because this provides key support level. So okay, over here, down to 105.10, 105 level. As long as it's above this trend line, is still strong, and this looks to be just corrections ahead of the PC. Okay, guys, I'm gonna call it a day. I'm a bit tired. Did my best. Hopefully, I managed to help you. Unfortunately, it wasn't pretty exciting day, uh, because it's all this repositioning, mainly portfolio rebalancing. Um, and the anticipation. Tomorrow, if we manage, we might have a snap analysis live again. So, because it's not a pre-scheduled event, if you want to join us, subscribe in the YouTube channel just to get an alert that we're going live, because it won't be a pre-scheduled event. So uh, we gonna have just a quick commentary, see a bit futures, and not having a full session tomorrow. Thank you very much. Uh, um, John, you can talk to your agent, and he will bring you in contact. Okay. Thank you very much, guys. Have a great day ahead. Take care. Okay. Sorry. Take care, because it's the end of the quarter as well. Okay. And tomorrow the data might surprise us once again, so be well prepared. Find your support and resistance levels, find your potential trigger points, do your homework, determine in advance any trigger points, as I said, any potential targets, any stop loss levels, etc., ahead of the data. Okay. Yeah, have a great day ahead. Take care, and probably we're gonna see you again tomorrow. Thank you. Bye bye.